Hey folks, Dan Frio here with your market update for August 30th, 2024. So we're seeing mortgage rates increase just a little bit today. The Govy loans or the VA loans popped the most. Not really quite sure why, but today is just released the number one inflationary number that the Federal Reserve puts the most emphasis on. So let's get over to Rick Santelli at CNBC to take this away for us so he can explain what's going on with it. Then I'm going to show you market reactions. Then we're also going to talk about this right through here. It says homebuyers must earn at least $80,000 to afford a typical house in the U.S. Is that accurate? You're going to find out. Maybe it's not as true as it reads. So without further ado, let's get over to Rick and give us the inflationary numbers, buddy.
Rick Santelli is standing by at the CME with the breaking PCE inflation.
Okay, again, guys, watch along the side here. You're going to see market reactions, what the equity markets are doing, what bond yields are doing, and everything else. So now we'll point up there. If it's something he's saying that's very informative, or maybe we're going to talk about it a little bit later, I'll go like this to just trigger you to know that we're going to talk about it at another point. So, Rick, take it away, bud.
Data. Rick? Yes, we are anxiously looking at the wires for this July read. Maybe some of the most important data points before we get to, of course, the September meeting. Right now, we're looking for the number on the headline to be up 0.2, and here it comes, up 0.3 on personal income, up 0.3, a little bit better than expected. Remember, back in May, it was up 0.4. If we look at the spending side, comes in up 0.5%, exactly as expected. In the rearview mirror, up 0.3. 0.5% is the best since March, when it was up 0.7. Now we look at real personal spending, up 0.4, also better than expected, double in the rearview mirror. That equals where we were in May. To find a higher level, you have to go to December of last year. Now, let's look at that PCE index month over month, up 0.2, exactly as expected. However, it is a little warmer than the up 0.1 in the rearview mirror. And if you look back towards April, it was up 0.3. Now, let's look at price index year over year, expected to be up 2.5. It is up 2.5, and it equals last month at 2.5. And all these 2.5s happen to be the lowest level since February of 21, and it remains that way, of course, because it was the same as last month. And if we look at now the core PCE, we'll start for the month over month, up 0.2, as expected, same as the rear view mirror. And finally, core PCE year over year, expected to be up 2.7. And on this one, we come in a little better at 2.6, which equals our last look at 2.6. 2.6 really is the lowest to the last 2 months, going back to March of 21. How did the markets react to all of these data points? We're at 390 on a 2-year. We're still at 390 on a 2-year. We're at 385 on a 10, still 385 on a 10. 2 years are down 2 on the week. 10s are up 5 on the week as they sit. And, of course, the pre-opening equities are about the same as well. And I would like to point out, with all the volatility in FX, the peso, the yuan, we see the dollar index actually up slightly on the day and up on the week.
So the fantastic news, the data or the inflation numbers were, I'll say almost everything was equal to or better than expected. So you go over through here, the Fed's favorite inflationary gauge increased 0.2 in July as expected. How's the equity markets and everything else doing? We'll just take a live picture of this. It's giving back some. When we were watching it, it was about 110 to 120 on the Dow Jones. S&P, everything was kind of gave back a little bit. We'll still take it. We're up on the Dow Jones, up in SP, up in NASDAQ, up in Russell 2K. The VIX, look at the VIX is the scarcity, not the scarcity, how fearful the markets are, how on edge, how edgy are they? Because it means if they're really skittish, any news is going to exacerbate the numbers. So we like the numbers at 15, 16. This was about 60% a couple weeks ago when we had that carry trade, when the markets just plummeted. This was at like 60, one of the highest levels that we've seen over the last, basically since they've been tracking this thing. So all these indices are really good. The cryptocurrency Commodities, we'll take it. It's up $18, nothing there. Let's go over to oil, see what oil's doing. And oil is down 3%. 3%. Fantastic news when it comes to the inflation numbers. Taking a deep dive on the economic news, let's just briefly go through to what Rick Santelli just went over with us, just to summarize this thing so you get all the numbers on one sheet. The core PCE, what core does is it strips out food and energy. Just like this week. And I know I say this all the time, but it drives me nuts. When I was driving to work on Monday, gas prices were $3.70 something. On my way home, they were like $4.50. They went up like 75% just within that day. I'm not exaggerating. I'll start taking pictures of it. So when they strip out food and energy, and that's what references the core. And then you have month over month, year over year. So we went from 0.2 month over month to 0.2. Year over year, we went from 2.6. They expected it to go up a little bit. That was the concern there. They were expecting it to tick up just a tad, and it didn't. It remained at 2.6. Now we're staying sticky. I'll take sticky and down versus sticky or unsticky and up on the inflation numbers. PCE month over month went from 0.1 to 0.2 as expected. That was a little bit of a concern there. Personal spending. This is the area where it's like, okay, guys, quit spending so much money. Could we attribute it to back to school, things like that? Maybe. And that's basically it for today. So all these numbers, we'll just say they're right in line with expectations. Okay, so now here's an article I see all the time. You need to make $1 million to afford a house or something like that. So I want to give you guys context, or let's just say the truth behind a lot of this. It says right through here, you need to make $80,000 to be able to buy the standard or typical home in the United States at this time. Okay, what's the price of a typical home? $250,000. The typical starter home sold for $250,000 in July, 4.2% over year over year. It didn't say negative. So that's good news. If you're looking to buy a house, you might not be losing money there. So just thought I'd throw that in. Okay, so let's get over to here. Rents. What are rents doing? Because we have to compare the two as well. But I'm going to show you how much you can really afford or how much you need to make to afford certain things. But let's go over to here. You had house prices going up 4.6%. And they're telling us, okay, basically, right through here also, the monthly housing payment for the typical U.S. starter home that sold in July was $1,981, up 4.4% from the year earlier. But then people are saying, okay, see, these payments are getting way out of hand. Well, let's go over to the rents. How much did typical rents go up in the area? So we're just going to go to Buy Property Managers. I just Googled this thing. Average rent increases per year, and it was just posted August 26th, 2024. U.S. fair market housing for a two-bedroom place increased 0.6 following a 12% increase for 2024. So rents went up 12% on average. In 2024, the average rent price increase, wait a second, let's see. In 2025, there it is. Okay, so in 2024, the average rent price increased 5.57. Hourly wages increased 3.48. So wages aren't keeping up with rents, but again, rents are up 5.57% versus the average home price or the home housing payment up 4.4%. Okay. Interesting. And then down through here, also in 2024, the price of a home sold increased by 6.26%. 2023 had the largest annual rent increases of 7.95%. So you had 7.95% in 2023. In 2024, you have 5.57%. So rents are going up quite a bit as well. So let's go into something just for curiosity's sakes. We have a mortgage calculator for sale, and it's down below. And it's really hard to find a really, really good mortgage calculator other than one that just says, okay, here's the payment, here's the interest rate, here's the term, here's the payments. Okay, here's the loan amount, so forth. Here's what this one does. This one's pretty in-depth. Kyle created this thing, and I love it. And we use it in a lot of our presentations. Okay, so here's what it does, and it's for sale down below. If you want to check it out, just click that link down below. You put in what your down payment is. So I would suggest you put in 3 to 3.5. We're just going to leave this as it's prompted. So this would be an FHA loan. How do I know? Well, FHA requires 3.5% down. With standard conventional loans, you only need 3% down if you're a first-time home buyer. Okay, so that's that. Interest rate, we're going to put into the market rates. That's pretty darn close to where we are right now. And we're going to go down through the rest of this thing and just let it stay where it is. is. Then what you're going to do is you're going to put in your income right through here. And I put in the $80,000 that Redfin told us that's needed to buy that $250,000 home. Then you go down through here and you put in any of the creditors you have. And this is the creditors on your credit report. Okay, not your cell phone bill and things like that. It's like your car payment, your credit card payments, if you have student loans, things like that. It's all ratcheted down through here. So put in your debts right there. Okay, if you have a cosigner, you're going to put in their information right here. But I just wanted to make a point. How much can $80,000 buy you? Okay, so let's go that. And then you're going to click affordability. And here's what you can afford. So there's 5 different captions here. One is just saying in a safe haven, if you want to basically live as safe as you possibly can, your house payment would be $1,200 and you can afford a $228,000 home. Okay, so where does that put us in realms to the how much house you can afford? So let's get over to here. The average house right now is $250,000. Okay, so in that case, it works. Okay, that's on a safe haven loan. We'll put it that way. If you want to take a little more risk, and basically this means if you want a little bit higher debt ratio, but you still qualify for mortgage programs. Okay, with a conventional loan, you can qualify with a debt ratio up to 50%. Okay, so that's right here through aggressive. If you can see down through here, this says 45% to 49%. How much of a home can you afford? $486,000. Okay, if you go with an FHA program that'll go up to a 55 to 57 debt ratio, you can go up to 560. Now, I wouldn't suggest that. These are the guidelines. So, don't rip me about it. These are the guidelines for all different kind of products from conventional loans, FHA, VA, and USDA. They're right along through here. So this is how much, if you're making $80,000 and have the typical debt that most people have, a car payment and credit card payments, that's what you can afford. So it's a far cry. You can see down through here. The most moderate one would be right through here. You could afford a $400,000 home. So where they get a lot of this data right through here, not quite sure, but just thought I would debunk that caption in today's video. So that's it for right now, folks. My name is Dan Frio. What do I do? Well, I'm a mortgage and loan officer. So I'm just a loan officer out here that does these videos to educate and inform you guys everything about real estate. The good news about it is I'm licensed in all 50 states as well as Puerto Rico. So if you'd love to use me, I would love to help you out in this scenario. So if you're looking to buy that first house, maybe you're looking to refinance, maybe you're looking to buy the second home or an investment property, we'd love to help. If you're looking to buy that first house and you're a first-time home buyer, I need you to click right through here, the grant finder. It's going to give you 2 options, national grants and grants in the Chicagoland area. Check those out. That's the first thing you need to do before you move any further if you're looking to buy that first house. Then from there, you can go to the Apply Now button and get the ball rolling, or you can give us a call. If you scroll down through here, our 800 number is 844-775-5626, or you can email me directly, yes, it is me, at dan@therateupdate.com. So thanks so much for watching, guys. I greatly appreciate you subscribing and watching my videos. If you haven't subscribed yet, you can do that right over there. And if you don't mind, I'd love to get to 31,000 subscribers by the end of the month, and you can help me out. So thanks so much for watching, guys. I won't be back for a closing bell. I have a corporate event to do this evening, so I will be back over the weekend just to post some updated information, and it's a holiday weekend, so please enjoy your holiday and be safe out there. God bless. See you next week. Bye-bye.